Hello, I'm Neil Screeton, owner of Screeton's Limited Chartered Accountants. The budget last week threw up a few things for people who own buy-to-let properties. They've previously not really been tinkered with too much over the last few years, but the Chancellor has made a few changes this year. First one, which is not really to do with buy-to-let, but it's people who take part in the rent-a-room scheme, where you actually rent a room in the house that you live in. the sort of tax-free allowance for that has been increased to £7,500. So that's good news if you have a lodger you rent a room to in your own house. Not so good news for higher rate taxpayer landlords, because from I think 2017 the rate of tax relief on mortgage interest on a buy-to-let property is going to be restricted. So even if you are a higher rate taxpayer, the tax relief you get on the mortgage interest will be restricted to 20% rather than 40%. So that will have a bit of an effect if you are a higher rate taxpayer. The other thing that's been proposed, or which is going to happen, is the abolition of the wear and tear allowance. On a furnished property at the moment, you get a 10% wear and tear allowance, 10% of the rent that you receive, to account for replacing furniture, furnishings and things. Now this is going to be abolished and replaced with an allowance, or rather a deduction for any furniture or furnishings that you actually replace. So now if you replace a carpet, for example, or curtains or a settee, then you'll be able to deduct the cost from your rent as opposed to claiming the 10%, which kind of clears up a bit of a grey area. So that's good news, really. So yeah, if you are somebody who has a buy-to-let property or several, and you want any more information on how this budget might affect you, then please do contact us, info@screetons.co.uk, 01827 715 264, www.screetons.co.uk. Thank you.